right, what is up, and welcome back, everyone, to another episode of the Long Game Podcast. I'm your host, Thomas Kopelman, and I'm really excited about today's episode. Recently on social media, I think a lot of people have seen an unbelievable amount of posts on, permanent life insurance, IULs specifically, and I think it's an area where, I don't know how this has blown up in the last few years, but there's just so many creators talking about it, lots of false claims. And, there's Andy Panko that I'm sure a lot of people who follow. And from him, I actually found today's guest. So today's guest is Robert Rikard.
Good job.
Rikard, yes. Okay, for a second I got worried there. Always something I don't want to mess up. But he's a partner and a lawyer at Investor Law Center. So he's somebody that kind of helps deal with litigation around these insurance policies. So I thought it'd be really interesting to bring him on and talk about the issues here at the end of the day to just make people more informed and not get oversold. So Robert, thanks for joining me today, man.
Yeah, thanks so much for having me. I appreciate it.
Yeah, I'm excited to do this. So let's just kind of start off, quick intro, who you are, and then we'll transition into the topic.
Yeah, sure. I'll just give you some quick background. I'm a lawyer, obviously. Been practicing law since 1997. I'm based in Columbia, South Carolina. We have offices in Columbia and Charleston. But I have a nationwide practice, and I've had that nationwide practice for a long time. I cut my teeth right out of law school with a very high-profile criminal defense attorney's firm. Did a lot of federal, state court criminal defense, white-collar crime cases, and led into us, did a lot of trial work. So we became, what everyone thinks is trial lawyers, and started doing some civil litigation, wrongful death, catastrophic injury cases like that. I left, went to another firm, which was a larger platform and had a more national practice doing mass torts and class actions and that sort of thing, which led me to where I am here. I started my own law firm in 2009, which is Rikard Protopapas. We litigate the IULs. We'd started the Investor Law Center just because in about 2013, I started doing a lot of securities litigation in the Southeast and around the country. Mostly rogue financial advisors, rogue brokers, rogue products, Ponzi schemes, municipal bond, fraud in that marketplace.
You're a hero.
Yeah. And so that's what led me to start the Investor Law Center, which was more of an education format at that point, because I just was realizing how many retail investors were just getting unbelievable bad advice out there. And I got into Index Universal Life. You got to remember, by this point, it was 2018. I litigated some super serious securities transactions. If you remember the auction rate bond blow-ups, again, we litigated against a number of the biggest investment banks you can think of, had litigated against a lot of broker-dealers. And I'd gotten a name in the Ponzi scheme space. When a Ponzi would blow up, investors would hire me, and I would, usually the Ponzi guy's going to jail. So he's spent the money, money's gone, he's going to prison. But there was this network of helpers out there, bad CPAs or tax preparer firms pretending to be CPAs or insurance agents or advisors. And we would sue lawyers. We would sue those folks who were part of the sales force that would prop up a Ponzi. And that's how I got an IUL. There was a big Ponzi scheme that blew up called future income payments. And along the way, there was a massive sales force across the country who had used that as a self-directed IRA to park qualified money into this Ponzi scheme and then deploy it as tax-free retirement income into a 3, 5, or 7-pay Index Universal Life product. And long story short was the first time I got one, I'd never seen one. I'd done some vanishing premium cases. I'd done some traditional UL type cases, but I'd never seen this product. And what was really interesting is I had like a little team of securities litigators around the country where we team up and do big projects together. None of them had either. And I kind of filed that away because, again, we were litigating the Ponzi scheme case. But the more I looked at this, when I would meet with these clients and say, all right, tell me about the whole pitch, they'd say, the whole thing was this IUL. it was supposed to be tax-free retirement income. I was going to pay 5 years of 500 grand and take out $6 million in tax-free retirement income. And I'm sitting there thinking, God, I'm an idiot. I've never heard of these things. And I started seeing these sales pitches, secrets of the wealthy and secrets of the rich. And one group was calling it the IRA reboot. And so I said, well, I need to sit down and learn this product. 'Cause I could not find anyone at this point. And I remember 2018, it was kind of in this weird life cycle of IUL had been sold starting around heavily in 2010, 2014, but it was mostly high net worth premium finance transactions that I was seeing now. But this was sort of middle market, middle America retail investors. And so I couldn't find them. Oh my God. And so eventually I realized that because I'm like, all right, well, I got to learn this thing because it's in all these cases because like 10 cases turned into 30, 30 turned into 100, 100 turned into 200. I was litigating this case in about 20 states. And I got to learn like what an IMO is and what these affiliate marketers are. And I literally told my staff, I said, I'm going to lock myself in my office for the next couple of weeks and learn this product. And I found a math professor at UT Austin, University of Texas. He had written about IUL and the mathematics behind it. So I flew out to meet with him, and I walked away from that with the inescapable, just conclusion that like none of these things, the way they're designed, are going to work. And I said, I had this epiphany, like had these clients not met me because their parking lot of money blew up that was funding the IUL, at some point in the future, the IUL itself would have blown up. And then they would have called me.
I don't think there's a whole lot of good research on the statistic of how many implode because who's going to do the research really? Like it's got to be like a U or a research base. Like those insurance companies are spending no time doing it. But from some of the numbers I've seen, it's like 80 to 90% of IULs imploded. And I started at a broker dealer, left as fast as I could, go in the independent world, hated the insurance side of things. But like I just remember case after case and client after client of people coming in to meet with their advisor at our firm of like, oh my gosh, my insurance policy is basically going away. You told me it was going to be good forever. But like for the middle America or below middle America, right? Like what they're showing you are pretty unrealistic hypothetical returns. But on top of that, they're assuming you're max funding these things in future years. And the average person just ends up not having enough money. Cost of insurance goes up, basically ends up eating all the cash value, policy implodes. That the person who sold to them is long gone. They've failed out of the business after selling these policies for 3 years to everybody they know, and then they didn't know anybody else.
Well, yeah, and so I can talk about so much of this stuff because I've literally since 2018 I've spent the last 8 years doing about 90% of my work revolves around index universal life litigation.
Yeah, hero again. I like the word for you.
I appreciate that. I don't know about that, but sometimes I feel like the character in The Big Short who's using the Jenga to explain what's happening to the mortgage-backed securities market.
So like the break periods away, or they're like
right. And so I started looking at it, and then we get into litigation. I start getting policy documents and internal policies and procedures and sales literature. But then I see commission reports, and then I have another epiphany. I'm like, oh, now I understand why. Is because you got this guy, and this is what is infuriating about this marketplace, is you have these insurance agents who are pretending to be financial advisors. They do everything but call themselves financial advisors. I see
financial professional,
wealth architect, retirement planner. I saw one the other day called himself a certified retirement fiduciary. I don't even know what that is. They make up the most outlandish names for themselves, and they meet with these folks and they figure out, most of middle America retail investors' wealth is tied up either in a home or their qualified retirement accounts. And they terrify them that their qualified retirement accounts are going to just be taxed to death when they start taking the required minimum distributions, and they scare them with volatility. And what really is insane is they say, well, you're paying these advisory fees. You need to come and push it in this IUL. And when I get the first year commission run and show it to the client, like, you left your $500,000 401k paying $3,500 a year in fees and transfer that to an insurance agent who made $200,000 commission. How does that make you feel? And usually they want to drive to the guy's office and like take a baseball bat to the front door, but it's nuts. I mean, it is, I think, without hyperbole, I've been sounding this alarm for a while. I think it is one of the biggest financial ticking time bombs in the retail investor retirement space in this country. And I say that because I looked at, and like you, I track this stuff a lot. I mean, I've litigated over 400 of these cases now. And I know my numbers. My numbers aren't even 1% of the premium that's sold in IUL. Last year was like 3.8 billion in premium. I mean, I'm a mosquito flying around in a hurricane, and they have to deal with me, and they don't like me. But I'm not really any sort of existential threat to them. I'm just a cost of doing business. And so I do a lot of these to just try and educate people, because now all you see is like, and I'll just tell everybody, like, I'm a trial lawyer. I've been a trial lawyer for 30 years, super successful. Know a lot of rich trial lawyers. None of us have IULs. It's not some secret of the wealthy. It's not some secret of the rich.
And no independent advisors do either, right?
No,
like I don't know a single RIA owner who has an IUL. And I think sometimes the hard part here is like, it isn't entirely bad, right? Like all of the permanent life insurance policies have a use case. It's so narrow. Like it's like, I have some clients who might need it for estate tax planning, right? And it's typically going to be whole life in there. You have certain people who are worried and they want a death benefit forever. And so they're potentially going to have, some type of index universal life policy that's only structured on death benefit. And that way it's going to be longer than term. But it's like, 0.1% of people might be a fit for permanent life insurance. But these insurance salesmen sell it to 100% of the people that they talk to. And so if you're middle America, right, and you can barely have an emergency fund and you can barely save, you can barely hit your 401k match, legitimately one of the worst things you possibly could do other than like go into credit card debt is put your money into one of these policies.
Oh, it's catastrophic because, first of all, those first couple of years of fees and expenses and everything that gets pulled out of that premium, it takes about 10 or 12 years for that policy to even sort of right-side itself. And that is why, like,
that's basically break even too. It's not even that you're like way ahead.
Right.
It's like you're just at break even.
And I'll give you an example. What was stunning to me is I had the case I tried in Idaho last year when I got a $1.5 million verdict against Pacific Life. That was a 67-year-old woman. Her whole life had been built into this 4-unit apartment building she had in Idaho, which she managed herself, painted the walls, fixed the toilets. That was her retirement plan. She sold it. I think the deal was like a $1.6 million transaction. The real estate agent introduced her to his financial advisor friend, who was an insurance agent. He sold her his first IUL and said, "This is your retirement plan." She was not married, had no children. And her first $125,000 payment, $106,000 came out in fees and expenses. And she was supposed to start taking immediate policy loans to fund her retirement, like in year 3. And I got the internal documents in that case, and because they were trial exhibits and they were public, I can talk about them. That particular Pac Life product, their own sales material said, hey, this is for high net worth, white collar professionals who are already maxing out their retirement plans, want to contribute more, and don't take a policy loan until year 15, when this one's illustrated at year 3. So, I mean, I'm like, guys, what are we doing here? This is nuts. And the sales agent had never seen any of this stuff because all they're taught how to do is sell it. They're not taught the mechanics of these products. They're not taught how they're built. They don't even know how the index crediting works. It's mind-boggling to me.
And it's so sad too, right? Because I think this goes back to your whole point on like non-licensed professionals. Like they couldn't even, half of them don't even know Roth 401k exists. They talk about the tax issues of all the money coming out, and you're like, you realize if you're worried and you'd much rather pay tax today to put an IUL, you could just use a Roth 401k or Roth IRA and be in a better position. But like, these are the stories I hear all the time. The fees are terrible. But then the other side is people don't understand on this infinite banking that it's a loan, right? Like, this is a loan that you either pay back or it's going to reduce what is in the policy, right? You don't all of a sudden get to borrow everything against it and then get this large death benefit payout either. It's like all of these levers really go against each other. And people just hear infinite bank, take out as much money as you can, but you're borrowing against yourself, so it's okay. In the same way you borrow against your home, right? These insurance people don't talk about you could have a HELOC, you could have a margin loan against your investment account, right? There are tons of other ways to borrow against equity and value that you have in your life without having extreme insurance costs involved for somebody who doesn't even have somebody they need insurance for.
Yeah, and it's so many things to touch on there. One is I got to tell you, half of my clients don't even understand they're in an insurance product. No, they think they're in some sort of super secret, boutique wealth chassis that only rich people, because that's just what they're told. This is what the wealthy use, how to get rich. But like you said, be your own banker or infinite banking. You see that, oh my God, on TikTok every minute of the day. I've sued all these carriers. I've read their policies and procedures. They all say you can't use the words private pension fund, infinite banking, be your own banker. Do not call this that. Call it life insurance. And they call it anything but. It's the wild, wild west of misrepresentations out there. And and I'll tell you, the flip side of it is, like, because I do so much of this, I've had I've had insurance agents reach out to me and say, hey, I was recruited into a multi-level marketing firm. I think I've screwed up. Well, tell me what you mean. It's like, I've sold like 30 or 40 of these and I'm starting to look at it and I don't think they work. And I'm like, well, did anyone give you any training on options budgets or how the bond market is priced in the portfolio behind the indexing credits, or he's like, dude, I was taught how to sell this thing. I've never even seen that stuff. I don't even know what you're talking about.
That's literally what it is. You go there and all they train you on is what is the sales language, the training, the do it, how do you get referrals, and how do you figure out the most amount of dollars that can go into it. There's really no training on alternatives. There's no training on financial planning. There's no training on does this fit the right person. And then the other thing is, like, the thing that you sell on of like be your own bank, the loans, the last thing most people need is access to more loans, right? Like, all of a sudden now you have loans, you lose your job, expenses go up, whatever. Like, most people's largest issues happen because they take too much leverage. Leverage is a tool that's amazing for high income, high net worth people, right? Like, you can do, long, short, direct indexing. You can borrow against your equity and, versus selling. Great. Low income people, the last thing that you need is any leverage because you don't have the income, the surplus, the liquidity to handle when leverage goes wrong.
That's right. I mean, I run a business. You run a business. I try not to use leverage, but we do because, it just depends on the ebb and flow of the business. But again, I run a business. I can game out how much income, how much revenue we're going to have, and I can use it wisely and smartly. If I'm 67 years old and I'm retired, the last thing in the world I need to be doing is borrowing money to fund my lifestyle because I have no opportunity to make that money back. I'm retired. And that's what really I think is borderline criminal, is this whole sales force out there is convincing retirees to reposition their qualified retirement accounts into an index universal life product. And I have a lot of cases because there is a very strong sales force in the IMO world that pitches that, and they fund the IUL, and then in year 2, they take a policy loan to pay the tax consequence of what they remove from the qualified retirement account. And those immediate policy loans begin a cannibalization of the IUL because you're layering in those early years where you've stripped out the big fees and commissions out. Now you're layering in loans. But then they use a little trick where they do the index crediting so they can show in the illustration how this is always going to be positive. But what happens is they get their annual statement and it's worth 0. And then eventually they get a lapse notice. And then, as you know, because they're never told, like, if you borrow out of this money, well, first of all, they're never told you're borrowing. They say it's income that you're unlocking. But when you unlock that tax-free income with a policy loan and the policy lapses, the government says, hey, man, you owe some tax on your ordinary income gain there. So pay it up.
And here's a secret for everybody, right? any type of borrowing is tax free. You don't pay tax on borrowing in any spot. You pay an interest cost. So it in no way is tax free to borrow against money that you already have. Like I don't know. It's crazy. It makes me mad that like this exists, that people can get away with it. I'm glad there's people like you who are kind of standing up and trying to set aside, because I don't think there's enough even information on social for people to know yet that it's wrong, or two, that there's like a defensible case, because we know financial literacy is low in the country in general, right? So the more complexity that you can kind of trick people in on these words, obviously people are going to believe it. Everybody believes the ultra wealthy have different tools, and they slightly have some different tools, but not like this, right? Their different tools are just, potentially private investments. But the reason why you protect against lower net worth or lower income people from it is because most private investments end up being zero. Some work out, some don't. But you also have a lack of liquidity. High net worth people can handle lack of liquidity for long periods of time. Low net worth people can't. Like in general, though, most high net worth people have real estate, businesses they own, and stocks and ETFs, right? Like
that's it.
You have the access to all of that as a lower income person. Maybe you have less contributions, but at the end of the day, right? Like it's not, don't look for these get rich quick schemes or things that are only to the high net worth, because that doesn't really exist. The other thing I want to hit on, though, that you talked about with the kind of the IULs of like that floor. So like what you'll see on social media, I see it all the time, is, hey, IULs are better because you get all the market participation without any downside. And that's not true, right? Because what happens is you have a cap. So, you might have a cap of 10%. So when the market returns 22%, you miss out on the participation above that. On top of that, you might have the 0% floor, but if you have a loan and then you also have the cost of insurance, it might be flat, but that still might go down. And so there's just so many misconceptions in there that people just believe because there's just not enough, I guess, info.
No, I think that's right. I mean, if you were to Google Index Universal Life now, the only thing you can find are their promoters. I mean, because again, I think what's happened is this unbelievable commission structure that's out there. So I've done this, right? I've taken dozens of depositions of insurance agents who sell this stuff, and I always ask, like, how'd you get into it? It's like, well, I went to a conference and I bumped into a guy, and I'm trying to sell some term, I'm trying to sell some whole life, I'm trying to sell some annuities, I'm doing 100 cold calls a week, banging out 65 grand a year, and there's these guys at these conferences who are making seven figures, and I'm like, how are you doing it? Well, I'm selling IUL. And so there's that, but then again, it's all sales focused, so they don't understand it, and that is, what do they call it? Zero is your hero, right? Well, half of them don't even understand. They used a lot of different proprietary indexes, but they'll use the S&P 500 index, and you have to walk clients through. Well, first of all, you were never in the index, and have to explain like how much dividends of the S&P 500 affects the S&P 500 performance. And you can look at the back testing of the S&P 500, and there's a lot of volatility, but it's a pretty steady 10% return over the last 15, 20 years.
It's up 75% a year.
It's not bad. I mean, it's boring, sure, stable and safe, but they don't understand is like those floors and caps and participation rates. When you start talking about that participation rate combined with the index credit, is all going to be based on an option budget of a company with its bond portfolio and how well or not it's doing. And the contract of insurance allows them to change that index crediting. And when it goes down, that credit you see you're getting, like, oh, well, I got, I get this a lot. It was illustrated at 6.02%, and, the index credit was 5.9. So I don't know, it must be doing well. I'm like, yeah, but that's before they strip out your fees, cost of insurance, expenses, and other just policy charges that no one understands. Because your true credit to your indexed account may be like 1.4%. And you were never illustrated that. You were illustrated this linear, amazing, everything goes right return in an illustration. And good luck if you were able to find somewhere in those 42 pages the little tiny band that talked about guaranteed rates. Because I've even seen agents pull that piece of paper out when they sell it, so the customer doesn't even have it. And it's just a whole there's a $1 billion industry that has been created to deploy a sales force that completely misrepresents how this product performs. And it's only one goal, which is to sell it.
Well, because the incentives are terrible, right? Great for them, terrible in how it pushes you, because every manager level gets paid based on below them. It really is like
Correct.
it's a scheme in that way that, like, hey, if you're a junior person, you have your team, you have 5 people, they have to hit X number of contracts. If they hit that much and that premium, you get commission, the manager does. And then the territory person, and then the person above. So everybody is being paid on the most being sold. And so, of course, humans are, you have a family, you want to make money, you buy nice things, you got to maintain it. Of course, a lot of people in this actually aren't bad. They're blinded by, they don't have a want to look into maybe the bad of it. And so they just kind of keep going through it, teaching the next person, go sell to every family member and friend you have. 2 years later, you can't sell enough premium to stay. That stays rolled up in the company. Next person comes in. It's just this terrible, multi-level cycle.
100%. I mean, I see it all the time. It's exactly what you talked about. From the agent all the way to the carrier, there's all these mouths in that chain, and their whole goal is to get their numbers up. Like if I'm the regional vice president, I need to make sure all of my agents in the field are producing. And what was crazy to me is I every now and then I'll get a very notorious shop that, they know exactly what they're doing, and they will just absolutely sell the lights out of these things. Like there's one particular group I've sued over 60 times. And they would have to switch carriers because the carriers would find out what they were doing, and they'd kick them off. And so I was in a deposition with the guy, and I said, you sold, you and your family, because it was a family-run shop. I said, you sold over 100 IULs in a 40-week period. And these are big target premium cases. And I said, how in the world did you do the due diligence on each customer for that? I said, we just had a lot of help from the IMO. We had a lot of help from the carrier. So we'll explain that. Well, the carrier visited our little office in Podunk, South Carolina. I said, oh, good. So they came to see like how you were selling all these? They were like, yeah, they came to see how we were selling it, what we could do to sell more, and could we teach other agents? And I'm like, for crying out loud, guys, this is a massive red flag. It's more red flags than a matador's closet here. And instead of coming out to say, what are you doing? You are saying, what are you doing? But how can you do more? And in that case, I think of the 100 transactions they did, I probably represented 70 of those customers. And I haven't represented the other 30 because they probably just haven't found me yet.
Man, crazy stuff. As we wrap up, kind of what are some closing thoughts that you have, or some, educational points you have for like individual consumers?
A couple. I mean, there's some high level stuff, which it's really disappointing because the carriers by this point, they know what the sales force is doing, right? They know exactly what they're doing. And they're hiding behind the idea that they are just a product provider. And these are independent sales agents that are independent producers that have the freedom to pick and choose whatever carrier they want to sell products for, or whatever product they want to sell. So, at the top level down, you have very sophisticated insurance companies around the country who could put a stop to this immediately. They could require certain guardrails on how this is sold and how it's illustrated. And then you have a complete lack of regulatory oversight because, this is insurance. Let's all remember that. It gets sold as an investment, but it's an insurance product, which means there's 50 different regulators. Insurance is state by state by state. And then you've got insurance agents who are watching TikTok videos of other insurance agents saying, look how much I made this week selling this product. And, that's what's really sort of super concerning to me, which is there are these agents around the country who are getting recruited by the lure of compensation. Nothing wrong with getting paid, but do the right thing to get paid. And, they are participating in a cycle they don't realize they're doing by harming. Imagine you're in a small town, you get recruited from a multi-level marketing insurance company, IMO, to sell. Who are you going to sell to? Your friends and family. And so in 24 months, your friends and family are going to be like, hey, Thomas, all my money's gone, man. What am I supposed to do? And believe it or not, I'm now in the life cycle of this litigation where those agents are calling me and going, what do I do? And I'm like, I don't know. Did you ever think about maybe understand the product before you sold it to your mom? Because
this isn't like $10 a month. Like this is so much money.
Well, and that's what people don't understand is, in TikTok world, it really is like they're targeting $200, $300, $400 a month, right?
And they'll tell you to cash out your entire 401k, pay the income tax, pay the 10% penalty, put it all in there. So there's like so much in there.
I mean, most of my cases, because people call me because these are 7-figure losses, right? I have cases right now where we're litigating where the loss is 3, 4, 5, 6. I've got one that's $8.5 million on a premium finance loan. And I mean, you're talking about ruining people's entire financial health. And no one is going to do anything about it. That's what I tell clients all the time too is, I'll get a case where there's like 9 things that the agent did that violated all 9 policies and procedures of a carrier's guidelines or a particular state's regulation. And my client, former customer, is like, well, they'll just pay, right? I'm like, no, we're going to have to sue them. And it's going to take like 2 years to get your money back. Because I can't just say, oh, you're a New York resident. They're not allowed to sell this product in New York. So they created a trust in another state and didn't tell you that's why they did it. And they sold it outside of that New York regulatory scheme. He's like, oh, well, you'll just tell the carrier. I'm like, I have told the carrier. And they're like, well, we want to take a look at this and litigate it for a little while and see what the discovery reveals. So, that my biggest thing I think I will tell people is, if someone is telling you IUL is better than a boring old well-allocated investment account, run. If they're telling you it's better than a 401k, run. If they're telling you it's better than an IRA or Roth IRA, run. Because it's not. And if they're trying to get you to move money from traditional safe investments and put it in there, run. Because they're lying to you. Whether they know it or not, they're lying to you. And it drives me crazy because I have seen the internal documents where each carrier has some version of probably what you show your customers, which is a pie chart of what's called asset allocation. And insurance is like a tiny little sliver of the pie. The problem is, in insurance agent world, pretending to be financial advisors, they tell you it's the whole pie. And the only person eating that pie is everyone in the commission chain, and you are the sucker.
That's an amazing place to close out. Super powerful. That's the clip at the very end, absolutely, of what you said. Because even on the disclaimer, right, this is for high net worth people who've already maxed out all their retirement accounts, probably have a ton of liquidity in their taxable account, et cetera. This is not an alternative to any of those. It was never designed to be. But hey, when you only make money doing one thing, it seems like the only thing to do. So
that's the thing you're going to do, right?
Exactly. But Robert, really appreciate you coming on, man. I think let everybody know where they could reach out to you, because I'm sure there's going to be advisors who listen that have clients this might fit for, or, I think it's just good to publicly share, hey, there is somebody who's on your side who will help you through it. You have a defensible case here with bad outcomes. So share that and we'll wrap it up.
Yeah, I appreciate that. You can go to the investorloss.center.com and find us. And we do this nationwide. I have now cultivated a very sophisticated team of consultants, policy analysts, expert witnesses that, we do a ton of premium financed IUL work, and then a lot of traditional just IUL sold as retirement plans. And we look at, dozens of these a week, actually. And if it's something we can do, we try to help these folks. I'm in the middle of actually building this team out, which is really exciting. So stay tuned for some announcements soon about that. But
and follow them on Twitter.
And Twitter. And I've tried to be more active on LinkedIn.
LinkedIn.
Just to counteract some of the noise out there. But, I figure if the regulators aren't going to do it, maybe the litigators can do it.
Absolutely. You're doing the Lord's work right now. So thank you for what you do. Thank you for coming on. Everybody, thank you for listening. Please remember to rate and subscribe, and we'll see you back next week.